Good morning, everyone. So let's talk about incorporating DCA, dollar cost average, into our market cycle or into our market playbook to know how we can be able to manage our portfolio. This strategy is not for individual stocks. I repeat, this strategy is not for individual stocks because you can be dollar costing individual stocks to your own detriment without knowing that the individual stock is actually going bankrupt. This method is for people who really want to grow their account and take out their capital before using their profit to risk on individual stocks. So let's begin. As a beginner in the stock market, if you play on individual stocks, if luck is against you, you will lose a lot of money. But if you are buying the main market, the major market like the QQQ, the SPY, first, they will not go bankrupt. So you are on a safe hand. But individual stocks can go bankrupt. How did I use this method when I was starting off? I'll explain to you. The first thing is identifying where I am in the market. That is always the first thing I do. Where I am. I will first of all know where I am before I will know what next to do. First, I've taught you how to identify where you are in the market. Let's use where we are now in the market to explain this. We reset here. We had a reset on this particular candle. On this particular candle is where we had a reset. This one. And then here is where we now broke above this our 10 MA and closed above it. So reset and a new entirely move have started here. So when this happened, this is on the monthly. Don't forget, it's on the monthly. That is where we know or analyze our position in the market. Now we see we are on this first move. The next thing we expect is the resting. After the resting, we continue before we now reset, which is the break, which will now correct again. You can trace it back to what I told you yesterday on the video of the market playbook. You can trace it all back there. Once you identify this cycle, how the market has been playing out, for example, here we had a reset on this one. On this one, this particular place, we had a reset. Then the market moved down. We broke above it here. We couldn't maintain above. We broke here and then we closed above. This is the first move, and this is the first resting before the market now continue and then reset. So don't confuse this. Let me take out this. Don't confuse this first rest with the reset. That is why I said you have to start from where the market have reset to know where you are, because after reset the market break above, close above, rest, and then continue before reset. So it goes through this process all the time on the monthly. Now here we reset. Up here we broke above, we close, the market is on the move. We will rest. After resting, it could be towards to this 10 MA, or it could actually come down to this 20 MA before we now make the final move, then reset. Okay, with that well being said, how do you now buy when the market is resetting? No, when the market is now resting. Resting and resetting is different. So when the market is taking a break or pulling back or resting, how do we now position ourselves? We now go down to the weekly. If you go down to the weekly, it's either, let's use all here for example, where the market was taking a rest. This is kind of a rest. It's either you will buy on the weekly engulfing candle, which is the first one. You see here it happened. So when it pulls down to the 20 MA, because that is where it always comes. But if it goes down more, it might come to the 50 MA. Now it came down to this 20 MA and formed this engulfing. Remember, if you look at the volume here, it's low. But let's assume you didn't actually look at the volume. It formed on this. You buy your first portfolio, like let's say 40% or 30%, because the market could still go down. When you start going down, breaking here and going down to the next moving average of the 50, do not sell this first one, because you know where you are in the market. You know you are not resetting, you are only resting, and this is where you should load up to prepare for the second move before the reset. I say it again, do not sell. A lot of people will say they are trying to do what they call stop loss and jump out so fast. Remember, don't do it here. You are only resting. A lot of people that have done this stop loss in, out, if you watch their account, they have lost quite a lot of money, because they don't actually know where they are in the market. They don't know where the market is going. Nothing. So here, the first one happened, you buy, and the market start to go against you. No problem, no panicking. Wait for the next setup, which is on this 50 MA, and then another engulfing candle came out here. Then you load up again. You have average down. You are buying here automatically. That is the dollar cost average. The dollar cost average. You have already averaged down. You are buying here, and then you now ride your move. When you are riding your move, you can switch back to your monthly to wait for a reset, then you are out. Or you can start to manage your portfolio, know how you can be able to, okay, just pick some profit, wait, the market come down to this weekly MA20, you buy again until it got broken. When it got broken, you can now be out finally. Okay, so this is just what I want to ship in. There is no point of you jumping in, jumping out. You can add this dollar cost average into your management strategy, and it will work out very well for you. There is nothing hidden here. Try it. Take out 50% of your investment portfolio to try this method, and use another 50% of your portfolio to do this. You in and out, like, oh, it has gone against me, I jump out, later I will jump in. When you are done for the entire year, check out the outcome. The result will now tell you how to continue. The next thing you have to do is, if you don't want to buy it, if you don't want to use this weekly method, you go down to your daily method. Now on the daily, let's come down to that particular place where it actually didn't obey or respect the first maybe the 20 or the 50 on the daily. Now when you have broken below this 10 MA on your daily, when you are resting, remember, when you are resting, when you have broken below this 10 MA, the first buy you will do is when you break above this 10 MA. So here you broke above it, you buy. You still hold your market. It went against you, and then on the second time again you buy. You don't sell, you still hold your market. And then on the third time again it break above it, you buy. You have dollar cost average this move, and then now the market start to move. So when you dollar cost your investment like this, it means you are buying when the market was getting cheaper, and it was actually on the resting stage. So doing this process, you will end up having a better, healthy portfolio. Those who are doing into trading, actually maybe they will just go in and then it goes up a little bit, they can catch something out and then still leave something here and then watch the way it plays out. It break again, they can catch something out, and then it goes just however you want to play it. But for people who don't have time for all this jumping in, jumping out, and you just dollar cost, just do DCA, dollar cost average, and you will see how your portfolio will play out. Most important thing is know where you are in the market by going to your monthly chart. Know where you are. For example, now where are we? The next thing we're expecting is the resting. After the resting, we're going to continue before we now do the reset. So this is how you should play to be able to easily get back your investment capital, and you can start using your profit to be doing your individual stocks. Individual stocks that you can actually do this same thing could be the big companies that you know cannot go bankrupt. Something like Amazon, Nvidia, these huge big companies that you know that they are well situated, they won't just go bankrupt. Okay, you can do it. But you see all these all these IPOs, all these new companies, or some companies that are not doing well, you can see their asset to their debt. Their debt is nearly 80% of their asset, and once they can easily declare bankrupt. And then you are doing, if you follow this method, you will just pour all your money into a dying company. But I am telling you that if you do it on the major markets, this is where it comprises all the big companies, all the companies are here, you will not regret it. You can give it a try, and then you can just use it for 1 year, this method, and then you can be able to compare what you have gained out of the market with your other methods which you have been using. Thank you.